Mastering financial controls. Companies that botch capital expenditure accounting are doomed to financial chaos. When an organization seeks to achieve operational excellence in financial controls, what procedures should its management team establish and maintain for effectively managing and accurately accounting for capital expenditures, including the subsequent depreciation and amortization of these expenditures? To establish and maintain operational excellence in financial controls for effectively managing and accurately accounting for capital expenditures, including subsequent depreciation and amortization, an organization's management team should establish the following procedures. Capital expenditure approval and authorization. 1. Establish a clear capital expenditure approval process that defines the roles and responsibilities of various stakeholders, including the CFO, department heads, and project managers. 2. Set up a multi-level approval process for capital expenditures, with clear thresholds for different levels of spend, to ensure that all capital expenditures are properly authorized and approved. 3. Implement a standardized capital expenditure request (CER) form to capture essential information, including project details, cost estimates, and justification. 4. Establish a centralized registry of all approved capital expenditures, including details on the project scope, budget, and timelines. Procurement and purchasing. 1. Develop and maintain a comprehensive procurement policy that outlines the procedures for purchasing capital assets, including competitive bidding, vendor selection, and contract management. 2. Establish a centralized procurement function to ensure that all capital expenditures are properly procured and accounted for. 3. Implement a system for tracking and documenting all purchase orders, invoices, and receipts related to capital expenditures. 4. Ensure that all capital assets are properly inspected and accepted before payment is made. Financial recording and accounting. 1. Establish a clear chart of accounts for capital expenditures, including separate accounts for different types of assets, such as property, plant, and equipment, PP&E, and intangible assets. 2. Implement a robust fixed asset management system to track and record all capital expenditures, including asset descriptions, costs, and depreciation schedules. 3. Ensure that all capital expenditures are properly capitalized and depreciated or amortized over their useful lives, in accordance with relevant accounting standards and internal policies. 4. Perform regular reconciliations of the fixed asset ledger to ensure accuracy and completeness of financial records. Depreciation and amortization. 1. Establish a comprehensive depreciation and amortization policy that outlines the methods, rates, and lives for different types of assets. 2. Implement a system for automatically calculating and posting depreciation and amortization expenses to the general ledger. 3. Ensure that all depreciation and amortization calculations are properly supported by documentation and are accurately reflected in the financial statements. 4. Perform regular reviews of depreciation and amortization rates and lives to ensure that they remain relevant and accurate. Internal controls and monitoring. 1. Establish a system of internal controls to ensure that all capital expenditures are properly authorized, recorded, and accounted for. 2. Implement regular monitoring and review procedures to detect and prevent errors, irregularities, or unauthorized transactions. 3. Perform regular audits and reviews of capital expenditures, procurement, and fixed asset management processes to ensure compliance with policies and procedures. 4. Identify and address any control weaknesses or gaps in the capital expenditure management process. Training and communication. 1. Provide regular training and communication to all stakeholders involved in the capital expenditure management process, including finance, procurement, and departmental personnel. 2. Ensure that all stakeholders understand their roles and responsibilities in the capital expenditure management process. 3. Establish a clear communication plan to ensure that all stakeholders are informed of changes to policies, procedures, or systems related to capital expenditures. 4. Encourage a culture of transparency, accountability, and continuous improvement in the management of capital expenditures. By establishing and maintaining these procedures, an organization's management team can ensure that capital expenditures are effectively managed and accurately accounted for, including subsequent depreciation and amortization, and achieve operational excellence in financial controls.